So let's be clear in terms of what the CEOs told us.
Absolutely.
They were more optimistic than last year, a heck of a lot less pessimistic than last year.
It's all relative.
It's all relative. And again, let's talk about last year, right? We had rising interest rates and no sense as to when it was going to stop or how long it was going to last. We had inflationary pressures exceedingly more so than we do today, et cetera. So we have a little bit more relatively calmness in the mix. Now, here's where it becomes really interesting. Are they confident they can raise revenues in the next 12 months? That's actually down compared to last year. So there's an acknowledgement of a slowing economy, and it's going to actually mean margin pressure, compression, and try to go after that market share as best they can. But at least a little bit more optimism in the broader global economy, and in some countries, their own individual economies as well.
And here's another point that came up at the PWC Global CEO Survey. Almost half of CEOs do not believe their businesses are going to be viable in a decade as tech and climate pressures accelerate.
Yeah, it's clear that the disruption is a top-of-mind issue. And this is where short-term and long-term are starting to converge together. Last year, we had about 40% of the CEOs saying, I'm worried about my business over the next 10 years. I may not be here because of these external forces. Now, here's the interesting thing. That has gone up to 45% this year. Let's talk about the 55% that don't think they need to change.
Right.
Because that's a problem, because the world and all the external forces are actually impacting these organizations bigger than ever before.
So actually 100% of organizations need to think about how am I going to survive
and that's the thought process here as to how well equipped is the C-suite in dealing with change management and moving fast enough to keep paces that are the changes that are out there. And you see the impact of AI, climate, regulation, geopolitics, and that's when it's really coming to life. And is it paralyzing to people and they stall and don't do anything? Or is it actually an opportunity that they can actually turn into a competitive advantage?
Is it too much hyperbole to say that we are actually at an existential inflection point for businesses?
I think you're at an inflection point that people have to move on from the going back to the same pace of change that we had previously. The reality is we've never had a faster pace of change, and this year is probably the slowest we're going to have in the next 10, because that pace is just going to continue. And that's the reality. So until the mindset shifts and you actually get action into your organizations, not just talk, but action, that's where the disruption concern becomes real.
And confidence in these surveys are actually so important, because confidence, if it's shaken, can affect deal making. You know, I'm going to hold back on CapEx, I'm going to hold back on making this transaction, and everything just stalls. Do you feel that confidence is currently being shaken by what is happening on the geopolitical front and by, just over the last week or so, the pushback from the Fed and the ECB on rate cut expectations?
So when you look at that uncertainty, there's still a lot out there, don't get me wrong, but it's less than what we've had in the last couple of years. So the reality is you're starting to get the C-suite and the supervisory boards a little bit more willing to take some risks, because that certainty is a little less volatile in their mind. So you are seeing a lot more organizations starting to think about, do I want to do the M&A activities? Do I really want to make those capital investitures? And depending on what part of the world, we're ready to go. If you're sitting in the Middle East or you're sitting in India, it's sky's the limit. Let's go on this stuff right now, because their confidence is extremely high in the abnormality to the global averages.
I actually spoke to the CEO of HCL Tech yesterday, and she said, I'm very optimistic, but she said, but I'm also from India. Because it's very different depending on which region you're talking to. So what is your outlook for both deal volume and size this year?
Yeah, I think what we're going to see is a slow increase in deal numbers, especially when you look at the latter part of the year, because based upon what we're doing in our work, we're seeing a lot of analysis and getting ready. Some are trying to be more proactive to take that proactive step. Others are being ready to maybe take a defensive step if a competitor does something differently. I think the size thing is going to be interesting. And the reason I say that is a lot of them are looking for new technologies, new IP, nuances that'll help their businesses. So the sizes may be smaller unless you're making a real big strategic bet. And that's going to be a little bit more limited in number than the norm of a smaller IP-driven IT.
I did a panel yesterday, and the topic was on sustainability reporting. You know, the fact that essentially, you know, people have been reporting on sustainability for decades, but it's now moving from voluntary to mandatory in many jurisdictions. And one of my key takeaways was this is going to be a bonanza for the